start with facts and assumptions. For example, if we know that our rent is €5,000 a month, then our rent is €5,000 a month. This is a fact. We might make assumptions when it comes to things like sales. We assume we will sell 100 Ferraris at €150,000 per car. So they are our assumptions. For companies who've been trading already, this process is a lot easier because we have the previous financials. When we're starting our budgeting process, one of the foundations is to get the prior year's accounts broken down by month with as much detail as possible in the P&L. So everything broken down, not just a compressed up P&L that shows fixed costs and variable costs. We want the P&L broken out so we can see as much detail as possible. We then need to move down through the income statement and challenge every line as to what's going on with this line, why is this line there, what information is on it. So I have the P&L here for every month, and then I've totaled it, and then I've taken the average. For some lines, the average will be useful. For others, it won't be. I'm not going to look at sales or cost of goods sold or salaries in this example. We'll look at those. They're separate budgets on their own. So let's start with the operating expenses here. We look at advertising. So what we would be thinking here is there a relationship between advertising and sales? So to test this, we could figure out advertising as a percentage of income. So equals our advertising divided by our income, and run that across. So that will give us an idea of whether there is a correlation between the advertising and the revenue. In this case, it doesn't look very much so. Some months the advertising is a very small part, and other months it's much, much higher. In a larger company, we would have a marketing manager, a sales and marketing department, and they would be involved in the budgeting process for our advertising budget. In smaller companies, we will be looking at what was spent the prior year, the return on that, and then trying to create our budget for the current year from that. The one thing we need to be careful of with things like advertising is it's very easy to say, okay, we spent an average of 3,424 last year per month. Let's just put that in again this year. We need to work out, are we getting value for this advertising? Is there a return on our investment? Does it need to be respent again? If we're getting a good return on investment, should we spend more on advertising and get even higher sales? For some advertising, it's long-term, it's related to the brand, and we're not going to see the ROI in that very clear. We're not going to see the return on investment. Whereas other forms of advertising, for example, Google might show us, for an e-commerce website, Google could show us the cost per acquisition. So we could say, okay, it's cost us €3 to make a sale. The sale is worth €50. So we have a CPA, and we can decide whether we want to increase our advertising spend based on that. For bank fees, we would look at the revenue for some businesses, like for example, businesses that take in cash, retail, hospitality businesses. The advertising revenue the bank fees would increase with the sales. So if you're handling a lot of cash, your bank fees go up with the amount of cash you lodge. Very simple. For ordinary businesses like an accountancy firm, a solicitor firm, the bank fees would be affected by the transactions more so than the turnover. So we could, the bank fees may not change very much. And again, they make up a very small amount of the P&L. So in this case, they're almost immaterial. So in the next line, cleaning, unless we had a change to the business, like a new office or a new store opening up, the cleaning would stay broadly the same. So we could just take the average for the year and use that. If we had somewhere like a meat factory that was deep cleaned every quarter, and we've seen that in March, the cleaning was 7.5, and then that came up again in June, we would want to be mindful of that, and we would want to be ensuring we're including that in this year's budget rather than taking an average. We're looking out for things like deep cleans. And in other businesses, we would have, say, a solicitor firm. We might have an outsourced cleaning company. So they have agreed the price in advance. We have the contract and we can put that in. And for other companies, again, we would just use the average. Consultant and accountancy, hopefully you would be able to agree these fees with the accountant or with the tax advisors in advance. So our consultancy and accountancy fees are agreed in advance. We have a record of what we're going to be charged. We have a quotation, so we can put in the correct amount for these, and the budget should stick to these very closely. There shouldn't be as much assumptions. If the business had a new line, say we were opening up a new shop, we might have an increase in staff numbers, which would give a higher payroll cost. We just need to be mindful of that also. Entertainment, this can be completely random. It could be just on the director's whim as to how much is spent on entertainment. We need to be careful for things like the Christmas party that we have included, and we can see it there last year. There was a massive increase in entertainment, and there could be a summer barbecue, which would be a large bill as well. So we just need to be careful of the large one-off costs. The other critical thing with this is that we are not particularly looking at accruals. So we could, for example, with our insurance, we could be posting that as a prepayment or an accrual. But if we're using this budget to then feed into a cash flow forecast, the accruals are useless. So we need to be very careful and decide from the start, are we looking at this on an accruals basis, or are we trying to look at it more so on a cash basis, or is there a mixture of both, and we need to work it out. So we need to be very careful that if we did smooth out things like the insurance, that we're fixing that or correcting it when we're doing our cash flow statement. For this line here, foreign currency gains and losses, again, we should know this from our exposure to foreign currencies. If we have the same amount of customers and turnover in other currencies, the same amount of suppliers in other currencies, it should be tied to turnover. If we're going to if we're hoping to expand the business into another jurisdiction, like we're hoping to expand into the UK, we're going to be exposed to the British pound more, we'll have to account for that as well. So foreign currency gains and losses can change quite a lot, but it really depends on our exposure. If our exposure to other currencies is staying the same as the prior year, then it will stay the same. If we have new suppliers, new customers in different jurisdictions, that could easily change. The freight and courier, this will be tied to our sales and our purchases. So if you're an e-commerce business where every package incurs a freight charge, your carriage out will likely be a percentage of your sales or will be tied to your sales revenue. If you have a physical shop, you may just have your freight and courier could be just carriage in which case your freight courier would be affected by your purchases, your cost of goods sold. So again, it depends on the business. Do we have to ship out every package and have carriage out? Do we just have goods coming in and it's based on our purchases? Our legal expenses, again, do we know based on, is there a court case coming up? Do we have a business plan that requires some corporate changes, which will require a solicitor? So we're looking at the plans for the year and trying to work those out, or maybe they will work off the prior year. Light and heat should be broadly similar to the prior year. For large manufacturing companies where light and heat makes up a lot of it, where they have a large electricity bill, you might be looking at the kilowatt hour charges for the current year. Is there anything we can do with those? Can we change suppliers and get those down? Are we increasing manufacturing and the light and heat are going to increase? Motor vehicle costs, as above, we would start with the prior year and then we'll look, are we bringing more vans online, more company cars online? Is there going to be changes to our diesel costs over the course of the year? I'm going to skip office and printing and stationery. Not a lot going on there. Our rent, again, we have our lease. We know how much our rent is going to be. Again, we just need to be so careful with the prepayments and accruals if we're going to be using this budget for our cash flow forecast. Repairs and maintenance, in this case, is quite small. In other businesses, this could be a very large cost. In a business with a large repairs and maintenance cost, it's likely they have on-site maintenance staff who can help us with that budget. For example, if we had a hotel, we could say, okay, we're going to have to, we're going to have to paint the outside of the building. We're going to have to paint the gates, and we can work out our budget by speaking to the expert inside of the business. Our subscriptions should be broadly able to be estimated accurately. If we have a Salesforce subscription, we have an online accountancy package, we know what subscriptions we're going to pay. We know how much we're paying at the moment. And maybe we could put in a small increase for price increases, anticipated price increases, but otherwise we should have a fairly accurate figure. Telephone and internet, if we can get our phones onto packages, we can actually estimate this really accurately. So if we have a mobile phone that has unlimited calls and data, we expect that that's not going to change. If we have 10 mobile phones with unlimited call and data, we expect that's not going to change. So we can have a really accurate budget by agreeing packages with the mobile phone companies in advance and making sure we're on the most suitable packages. Travel, you need to be careful with this. Like the business could be going to a trade show, have plans to go to a trade show. So sales and marketing department would know that we're going to this trade show. This is going to be expensive. The directors are planning on going to a conference. Again, that's going to be expensive. So we need to talk to people, talk to the experts, build up the budget from that, and that will reduce our variances and improve our forecasting. I'm not going to go into the salaries as they are covered on a separate video.